This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Welcome back. I'm going to talk about the market today, and I'm going to give a market update, go through the market conditions, but I do want to address something that I think is pretty important. And the question becomes, can this keep going? Is this like a last gasp rally? And I'm going to kind of show you how I think there's actually the possibility that this could keep going, at least for now. But we'll be able to identify if things are starting to change, and I'm going to go into that as well. All right, let's go ahead and get going with this. Now, if you're interested in learning more about some of these techniques, I would suggest going to rabilstockresearch.com/book, and you can get some more information. Also, if you do like the material that you're seeing, the content, hit that like button and also subscribe. Okay, lots to cover today. I do want to get into these market conditions because we did see the sentiment jump up again. We're back up to 43% more bulls than bears. Now, at this peak here, we were up at around 46%, I think, somewhere around 46% more bulls than bears. So we're getting up into that range again that's a little bit different. Now, when it reached that point and then we dropped down, it dropped down to like 25 or 26%. So it was a really fast, quick drop and move to the downside. But now we've kind of swiftly moved back up to 43%. So we're in that danger zone. So you got to put this flat out in the big negative camp, okay? And we're also back into overbought territory when you look at the RSI 5 on a weekly chart. We're back up into the overbought territory. As you can see, we stayed in overbought territory for a very long time. To start the year, actually, it turned up and it stayed up there for quite some time, a few months. So it's not necessarily, so I want you to think about this here and this here and even these as conditions. Okay, these are market conditions as opposed to timing tools. We want to look at these as kind of underlying market conditions. It tells us about the health of the market, what kind of risks we have. And I think there's, increasing risk taking place here. Now, we do have to accept the fact that we've got ourselves a little bit of a focal point on AI. Okay, and I'm going to get into that when I move over into the other chart, into the trends. I want to talk about a few stocks. I want to explain how I see things playing out right now, because this is starting to look a lot like 99 in a way to me. I lived through 99. I remember it pretty clearly. As I told you guys, I was actually working on a hedge fund during that time. So we did a lot of trading. I think, this seems to be a little bit more narrow in the AI space than it was in the internet space. It seemed like there were more stocks participating, but the concept is the same. I wanted to show you a few things that I think could help in terms of your thought process right now. All right, but first, let's just show you, we got the daily. Is it neutral now? I'll explain why that's moved to neutral in the volatility. We have negative. You can see that the average true range is above a rising moving average on the weekly chart. All right, so that's a negative. All right, we got three big negatives over here. That, again, is just showing increased risk. All right, that doesn't mean it's a sell. It means that the conditions are starting to get a little riskier. Now, when we look at the trend and the momentum, which I think are tier one indicators. So I'd view this as a primary indicator. I view these as primary indicators, and I'd say these are secondary. All right, meaning I'm not going to make a decision on these alone. Okay, but I could make a decision based on this alone. All right, with this being supporting evidence. So I just want you to think that way. I try and bring this up on a regular basis because I know I've got new people watching. I just want you guys to understand how you want to look at these. The trend and the momentum are the most important to me. I will not fight a trend that has good momentum. All right, no matter how extended it looks, no matter how whether there's resistance in place. And no matter how volatile it is or how overbought it looks or how bullish people are, right? We don't want to fight that. Now, that could determine how much you want to play. These things could determine how much you want to play and how much new buying you want to do if you're in cash or something like that. But in terms of this is going to help us, these top two areas are going to help us determine, I think, more immediately where we have signs of a true turn. They're more of a timing tool. All right, I just want to make sure I covered that. All right, so let's just look it through. Let's start going through this. So we have the average true range. It is above the moving average. Now, the moving average is more important to me. All right, it's declining. So although I moved it to neutral, to me, it's as long as this is declining, we're still okay here. And as I've been saying, since this has been down even through this rally, I've pretty much been telling my subscribers we're okay to do more trading-oriented type stuff right now. I'm less inclined to want to do the longer-term trades after we've had such a great period for long-term trading. All right. So just keep that in the back of your mind. It doesn't mean you can't do any longer term trades. If you find something that looks really good on a monthly and you want to trigger it off the weekly, don't have a problem with that. But I wouldn't go crazy doing a whole bunch of new buying right now based on that criteria with this volatility up like that. All right. Now, let's go ahead and switch over to the time frames. We're going to start with the S&P, and I want to just cover, so let me first just go through the momentum conditions. We've got a strong trend in place. I mean, clearly a bullish trend here, a bullish trend here, and a bullish trend here. I mean, there's no arguments there. When we look at the trend, everybody should be on the same page here. If you're using my approach to the world, and almost everybody's approach to the world would be putting all three of these time frames at positive. And now this one too, but I'm only focusing on these three because this will change constantly. So I don't really want to get involved in that because it from week to week, these are going to pretty much stay where they are. And then we'll see a shift at some point during the course of a week. And then it'll change. This could change one way, back another, and then another by the time I get back again Friday. All right. So here's one thing I wanted to mention. So both the momentum conditions on both MACD and ADX on the monthly are fine. The momentum is fine here based on ADX. Green DI has been lagging and is showing some signs of maybe a slowdown in the buyers, but we don't have any strength in the sellers. All right. So it's not like we're moving into this situation where the buyers are coming out. And I mean, there's a fewer buyers and the sellers are coming in. We're not getting into that situation. It's just sort of like the buyers are not quite as interested in pushing this up, at least based on how that goes. But for this line, this blue line, it has to do with whether there's selling strength too. And we don't have that at this point in that time frame. On this time frame, again, we're in an uptrend. We're showing a little bit more strength, and that's causing the green DI to break out again, getting back above 25. Now, it hasn't taken out this prior peak, but it did take out this little red peak that was made. And I think that just puts the buyers back in control again. Now, don't get too wrapped up in the fact that the MACD has not made a new high. Now, it is the reason, the fact that the ADX is still below 25 and the fact that this is below this high is the reason why I have it at neutral for the daily. All right. But I'm not sitting here, on the edge of my seat thinking this is going to be a divergence. I really don't. I think there's too much strength in this move with the gap up. And I think ultimately this is going to confirm. So don't get in this situation where we go to a new high and this doesn't confirm and you're instantly looking to short. It doesn't work like that. Sometimes there's a little bit of lag to the MACD. And the same with DI. If we look at the DI right now, it's actually making a slightly higher high here with the most recent move. Okay. It's not confirming this peak up here, but most recent little pause and move to a new high showing a little bit more strength. All right. So again, don't get too wrapped up in every little nook and cranny of the move. So here's the way I look at this. We've got this situation where the market is, and let me just show you so let's look at a few stocks, and then I'm going to come back to this S&P. Look at what NVIDIA is doing, all right? You see the monthly chart. You see how ridiculously extended this looks, okay? You see how this is just kind of taken off like a rocket. And then we can go and look at something like AVGO. Look at that monthly. You see how far away that is? You see how extended that is? This is the biggest month that this stock has ever had after an extended run. So we probably should be looking for some kind of a top out or something like that. And that could very well be the case in NVIDIA as well. And that would be highly concerning if we didn't have something like this taking place this week. You see how Apple's just breaking out of this 200 range? So it formed a little base on a base. So we had a base here and we broke out but didn't go anywhere, and then formed another base, and now we're breaking out. You could almost look at this as like a two-step base breakout. So, when you look at that and then you go and you look at something like Microsoft, now it's not as big a base, but it is a pretty nice looking breakout at this point. Good momentum conditions in all these, okay? And then look at something like, let me pull up another one. Look at Oracle. Look at this breakout in Oracle, right? I mean, look at so this one is one of the ones I talked about in a prior video last week, which was ADX actually showing some strength here, but look at this low ADX condition here that we're breaking out of. I think this is a really good sign for this stock. The potential is that we could see stocks like NVIDIA, we could see stocks like AVGO take a breather, maybe form some kind of a little bit of a top in here. We've got other stocks to take the baton now. All right. So we have to accept that we don't want to project. Don't assume because everything's going up right now that we have to top. It doesn't have to play out that way. If we go back and we look at the way some of these stocks topped look at what happened to Oracle in 99. This is one of the leaders back then, and it looked incredibly extended on this move here, right? Even here, but it took several months for it to top out. So we don't want to, so this is almost like where NVIDIA is right now. It's possible it could be right in this area, but I'm just saying, look at how long of a process it takes sometimes to top a stock out, even after an extended run like that. So don't get in too big of a hurry. Now, when I look at this right now, this doesn't have any kind of a look like that. It's not extended at all. So I think this is pretty important to recognize, all right, which means I'm not sitting here day by day thinking, okay, we've got a top tomorrow. I'm not, that's not in my head right now. Now, I've talked about the IWM and the Russell. We need the Russell to kick in to turn it into a healthier environment. What we're seeing right now is not a healthy environment. It's very, very narrow. Let me just show you this. So we've got Microsoft. We just look at these top 6 stocks. They make up 30% of the market. All right. 30%. Man, that's a big, big number for 6 stocks. 6 stocks controlling the market, essentially. If they're up, the market's pretty much got a pretty good chance of being up. And let me just emphasize that even more. 32% of the market is in technology. All right. That means all of these combined do not even make up, I think they're like 25% combined. All of these sectors combined, right? Don't even make up. This could be up, these could all be down, and the market could have a decent day. So we have to kind of recognize that. We got to recognize the fact that it's anytime a stock is mentioned with respect to AI, we're getting a lot of movement, a lot of follow through, a lot of strength, a lot of money trying to be involved in that. If we want a better environment that has a little bit more expansion to it, a broadening effect where more stocks are participating and we're getting a lot of action across the board that is healthy and is going to see follow through, that's where we want to see this Russell break out and start to show relative performance. If we start to see this show relative performance with some momentum behind it, then all of a sudden you don't have to be uber focused on, the top tech stocks and stuff like that, right? I mean, now we're not even down to just tech. I mean, it's not just the tech sector because really it's semis. If you look at software, a lot of those stocks have been going through corrections. So we're in an environment that I think is a little dangerous, but it might not be over yet, especially what's taken place this week. So I wanted to make sure I covered that. All right, now let's decide how we handle this. First of all, we got to understand that we just made a move to the upside and we're kind of jetting away from the 18-month. All right, I don't think we have now made a pivot on the weekly chart. And we did not come in on the monthly. Like we actually created. So here's the way I do this. If you create a pivot high, which this was a pivot high, and you go to a new high, but you don't come anywhere near the 18, then you have to go down a time frame. So we know the monthly isn't in control right now, but we do know that the weekly is, because we made a pivot high here. We held the 18. The 18 is in command on the weekly chart. All right. We didn't really create a pivot here, so we don't have. We got to be on the lookout for a pivot that develops. So let me just give you an example of this. We'll go back in time a little bit. So we came up here and we created a pivot on the weekly. You see how we created a pivot high? If you don't understand this is out of my course. I give a lot of detail as to what constitutes a true pivot. If we make a pivot low, high, pivot low, and go to a new high, then we know that the daily is in command here. And you can see that we kept on pivoting at the 18. We kept on coming back to the 18 and then finally topped out there. We never jetted away from the daily. We just ended up breaking it. But there are times, and I've seen this happen, where we can jet away from the 18 day, and then the hourly could be in control if we create a pivot above the 18 without touching it, right? So we haven't done that yet. I mean, I wouldn't consider this really a pivot. It came pretty close and touched it, but it doesn't really qualify. So we're on the lookout for that. And if that happens, then we know the daily is in control. Now, it's possible that the weekly could just break down, right? But right now we're watching the weekly. We're not getting too crazy with the daily. Now, one of the things you can do is look at this, basically this trend line right here. This is an area where we've topped out. We're coming into this again. Now, if we break through that, odds are we're probably turning into an accelerated mode. Okay, we're going into some kind of an accelerated type of a mode, and we'll probably see a lot of these tech stocks maybe make a decent jump in the near term. So these are all kind of important things to be on the lookout for. I know a lot of this is conjecture in a way. There's no, it's not like I'm saying this is going to happen. I'm just saying these are things to be aware of if they start to take place, if they start to take off, if we start to see a pivot that develops that doesn't touch the 18 and come anywhere near the 18, kind of like what happened with the monthly chart. Or what happened with the weekly back here. If we get something like that, then we know that we're probably going to have to watching the daily chart from there on. Right now, I still think the weekly's in control unless we make some kind of a surging move. All right. Let me know if you have any questions, and we'll see you next time.